So our next panel will be discussing the post-ICO future of blockchain investments. So we know that every ICO begins with a white paper. You try to read it, you check the team, and you check the roadmap. You skip all the pages in between. And then you join their Telegram group. You ask the admins questions about the white paper, trying to look smart. And then the admin redirects you to their YouTube video, which you watch for the first 30 seconds. And then you're now convinced this ICO project will moon for some reason or another. And then this process repeats itself. So now you have all these tokens, and you check its price every hour of every day. So this is pretty much my life now. So happening on this stage, as mentioned, is a panel discussing what happens after the ICO. Beyond Crowdsales, the post-ICO future of blockchain investments. Leading our first panel discussion for today is Mr. Han Kao, investor, founder, CEO, as well as author of CryptoBriefing. Ladies and gentlemen, please join me to welcome the panelists on stage.
Mic check.
Check, check. Good morning, everyone. Welcome back to BlockShow Asia.
The name and the moderator. Yeah.
We have a very exciting and timely discussion for you guys tonight. Beyond Crowdsales, the future of blockchain and investments. We have a very exciting lineup of panelists for you guys tonight. And maybe we can, very quickly just go around real quick and everyone can introduce themselves.
Hi, everyone. My name is VAYS. I come from the traditional Wall Street background. My first job was at Bear Stearns about 1.5 years before that investment bank went down. Joined the crypto scene around 2013, 2014, started speaking at conferences, writing articles. I now run a pretty popular YouTube channel just under my name, VAYS, and traveling the world trying to explain what Bitcoin is, what a blockchain is, and really enjoying this ecosystem even today with the current prices.
Hi, everyone. Great to be here this morning. It's really nice to see a packed room. It's very uncommon now at crypto conferences because we're in a bear market, so thank you all for being here. So my name is Jane Lippencott. I co-founded ZenCash in 2017, which is a privacy protocol. And then recently I started working for a proprietary VC that is now starting a proprietary quant fund in crypto. We're based in Hong Kong and the Netherlands.
Hey, good morning, guys. Thank you, everybody, for being here. My name's Cal Evans. I'm the founder and managing consultant of Gresham International. We're a legal and compliance firm with offices in the United States and the European Union. I myself have consulted with a number of governments, government of Estonia, government of Dubai. I'm a board member of the British Blockchain Association. I also write, I speak, obviously, and I'm just generally very enthusiastic about the crypto scene in the crypto world, even in the current market.
Hello, everyone. This is Eric Chung from South Korea, and actually I'm the co-founder of the Vision Creator. Vision Creator is kind of like a digital asset focused group. Under our group, we have like 4 business departments. For example, BCI, the crypto fund that I run right now, and then Chainers, which is a service provider for projects to come in to expand their business or in Korean market. And XR is a system algorithm trading team based in New York, and Rechain is a research center based in Shanghai. So we pretty much have a full range of the services and investment arms in our company. Nice to meet you.
Great. And finally, myself, my name is Han Kao. I am the founder, CEO of CryptoBriefing. We are a crypto media and blockchain research company. So before we start talking about going beyond, ICOs, let's take a quick look at what happened, how we got here. What are some of the factors that precipitated to the downfall of the ICO, and maybe some lessons learned. This question's open for anyone, if anyone wants to take it.
I mean, I can start. So I don't think many lessons were learned. And I wasn't able to, I'm a trader, and again, I come from Wall Street, and I never understood how back in the year 2000, back in 1999, how were these companies that all they had was a website, no clients, no developers, just a fancy website, and these companies were trading for $100 a share on the NASDAQ, and then it all came crashing down. It took 15 years for the NASDAQ to recover financially. Meanwhile, the internet was just being used and used and used. Never understood how people got into this groupthink and irrational exuberance of buying into this stuff until I was smack in the middle of this ecosystem. To me, Bitcoin was something revolutionary. It was a way to separate money from government intervention and give people freedom with the way they can spend their own value transfer. And somehow, everyone around us just wanted to print their own money. And everybody else started to believe in that. The ICOs were not revolutionary. It was just a way to get around the regulatory space. And the regulation is finally catching up. I was very critical of the Ethereum ICO, and I thought it would only lead to something bad. And now I guess other people are somewhat starting to realize it. So I was on the other side of it. I was warning people the whole way up and the whole way down, and I continue to do so.
So I think there are a lot of ways to look at ICOs. I think Tone's point is definitely valid that a lot of founders, unfortunately, just went for the money grab without solving any hard problems first. And so they're certainly now not lasting through this market. But forgetting for a second about the way that they actually raised money, even the projects that just did an airdrop, for example, or raised equity back in 2017, early 2018, because there were some of those, I think they still never really figured out how blockchain applied to their business and how to create token economies that are actually sustainable. I think there were a lot of paradigms that were pretty easy to digest, but were provably untrue. Like the idea that the more people buy your coin, the more the price will increase. Like that's not necessarily true. There are a lot of factors such as momentum and volume across your protocol or across Ethereum and the dApp that you're working in. And so I think there's a lot of work that still has to be done on kind of the fundamental building blocks for any altcoin project. Before we're going to see real businesses that should be VC-backed, that are built on blockchain and incorporate blockchain. The only reason I'm kind of a big fan of ICOs, and I think eventually there will be a place for them, is because I like the idea that retail investors can get involved.
Thank you, Jane. Makes a lot of sense. Cal, yeah.
Yeah, sure. I think, just playing devil's advocate on the panel, I think I've always been a big advocate of ICOs. I think they enable companies with revolutionary ideas to get funding to access. And I think what we've seen actually is more of a maturity around the ICO. And for those of you that have heard me speak before, sorry, by the way, I've spoken frequently about how, from a legislative standpoint, we've seen that actually the smaller operators have had to become innovative first, which is why we're seeing laws coming out of smaller countries such as Malta, Estonia. And it's not being dealt with, as an example, in Europe at the European Union level. Whereas if we look at other financial instruments, the bigger countries, the bigger organizations will take the lead and make the laws first. So what's happening is we're actually at a point where the legislature in the larger jurisdictions are catching up. And so that's having a bigger impact on the market, especially the ICO market. And now, of course, consequently, we've seen different evolutions of that. We've seen the TGE, the STO, various different models that have come about. So I think it's a bit of market maturity that's happening.
Okay.
I'm sorry, can you just elaborate a little bit on what revolutionary ideas you have seen from the ICO space? Because I haven't seen any. All I've seen is a way to solicit funds from unqualified investors.
You haven't seen any revolutionary ideas in the ICO space?
Zero. Ethereum is as close as we got, and it's just a platform for other people to create securities. Bitcoin is actually revolutionary. I think that word is very misplaced. There's not that much revolutionary things. I mean, Airbnb and Uber have done well, but again, it's not that revolutionary. It's just like a way to pick up people in cars. Like, I haven't seen anything revolutionary. I think that word is grossly misused.
So, I mean, the revolutionary expression comes from the fact that companies that are designing revolutionary things don't have to go through the atypical financing round. They may not need as much money, so they may not be in a position where they need to enter a situation where they're filing some kind of regulation in the United States or regulation in Europe. What it means is actually, look, I've got this opportunity to raise money and I can do it by allowing people to participate in my organization. The biggest problem that we see from atypical finance models is that bigger VC guys come in, finance houses, and I'm aware of the other panel members here, and they will typically look to take a large percentage of the company for very little input. And what the ICO did was that turned it on its head and it said, look, I can still control 100% of my company and get the money I need to do it while actually giving something to people that may help them out on the way. And that in and itself is revolutionary.
But is there a single company that has been successful in doing that? In actually building, in actually building a product and bringing it to market?
I think what's...
guys, there are people in this audience here that have had revolutionary things that they've developed through ICOs.
So I think let's talk about some of the good things that's come out of ICOs.
Actually,
to jump the
it was
gun
very
there.
interesting to hear your conversation. Anyway, so like two gentlemen and one lady already talked about like ICO market like conceptually. So I just wanted to like probably people might be very have a question about how really is the ICO market right now? How it does look like. So I can give you the numbers in Korea. So I'm from South Korea, so I can give you the numbers from South Korea market. So actually, until like from January to this October, Korean market there were like 72 ICO projects. They raised funds, and actually out of like 72, we could only catch around 40 projects that really revealed their raised fund amount. And like out of like 40, there were only like 8 projects. They raised like more than $30 million, and including the 8, probably like 12 projects. They have like more than $10 million fundraise. And more interestingly is that after the raised funds, actually no single project has actually released their actual product like Mr. Tan mentioned. So the reason the market is crashing right now is because they raised like tons of amount of money early this year until October, but there is no single product in the market that is actually used like investors the crypto investors can use in the market. So that's the reason people are leaving the market right now. So yeah, probably it might be the next like question. How can we how can the market will
and you know I really like the concept of the ICO, right? So aligning investors with projects, with customers. That's something that you can't do with traditional stocks and equities. I think in theory it's a very, very interesting concept, but you know, let's talk about some of the good things that's come out of this, and if there has been any good things that's come out of this last 12 months or 18 months. And you know, and how has this potentially have changed the traditional landscape of investing?
I mean, just to talk for a second about some of the good things that have come out of the past couple months, not necessarily that have come out of the concept of ICOs in general. I think because many projects, like you were mentioning, I know for a fact that a bunch of those Korean projects actually either didn't ever sell their ETH that they raised, or they smash sold it at really, really low prices. And so these, like $30 million, just say that they raised, maybe turned into like 6 to something like that. And so the likelihood that they will actually have working products and businesses with the capital that they now have sitting in their reserves, it's not super high. And I think anyone who is invested in these projects knows that, and that's also why the market is drying up, especially speaking as a fund. We are now thinking about other ways that we can support entrepreneurs in the ecosystem, and definitely looking at increasing the strenuousness of our due diligence process. But I think over the past 6 months, people are really starting to get their shit together. I think that founders are finally thinking about things that are very unique to crypto. Like, for example, they actually have to understand markets. Like, they need to understand how to negotiate with liquidity providers, with market makers, with treasury management services. These are not things that they can neglect, because most of them end up initially having reserves that are entirely and highly volatile, like risky assets. And so I'm excited to see how some of the institutional players and people who have real experience in finance, and also just generally in startups, can really add some value to the crypto space, and hopefully we'll see kind of like a new emergence of really quality companies over the next year. And also, just really quickly, I would say it's important we take a look at the coins that raised earlier than this craze, so before 2017, or before the end of 2017, because a lot of them are releasing product now. And although I haven't seen anything revolutionary, it is pretty exciting that some people are still hard at work.
That's a fair point. I can tell you've done this before. Thank you, Jane. Anyone else want to answer that?
I can always comment. Like, I have not seen anything revolutionary about separating unqualified investors from their money. VCs can barely beat the returns of the S&P 500. And it's their job to find profitable companies to invest in. And they can barely beat, like for example, if you're a rich person and you give your money to a VC, you're probably going to lose more money over the course of your investment than you're going to make it. And this concept that the average person that has a job or has the ability to pick out winners and losers in a brand new industry they don't understand, in speculative companies, people always say, hey, what if you had the opportunity to invest in Facebook before it went IPO? You would have lost all your money in MySpace or Friendster or God knows any of the other 20 or 30 social media platforms. You don't have the money to invest in them all, and there's no way you have the ability to pick winners and losers. The reason why the VCs want to get a piece of the company they invest in is because they want actually to get something in return. Most of the people that invested in these ICOs, they lost a lot more money than they've made. A few people were able to get out at the top. I do see revolutionary, not revolutionary, but Bitcoin is revolutionary. I do see a lot of good that has come out of the Bitcoin space. The energy consumption. A lot of people talk bad about the mining infrastructure of Bitcoin. It wastes so much electricity, and they try to demonize Bitcoin. I think Bitcoin mining is going to revolutionize the way we gather renewable energy. I think it's going to revolutionize the way energy is being processed. I think the chip manufacturers are going to revolutionize the way we process information in computers. I think there's lots of good coming out of it. The whole concept of separating money from the control of government is also going to be amazing when people can actually save in a way that can't be confiscated by their governments, the way it happened in Cyprus, the way things happened in Greece when their bank accounts were shut down. Just transferring money cross borders to yourself, to your friends and family in a way that isn't stoppable. I mean, that's what's actually going to change the world. Being able to solicit money from unqualified investors, I think that's going to go away. People are going to wise up, and it's going to go back to the way it used to be as far as trying to finance your company. Like just one quick note. Like if your distant cousin that you know has never achieved anything comes to you and asks you for a bunch of money for him to start his company, you would laugh and not give it to him. But yet you're going out and buying somebody else's ICO. That cousin of yours probably knows what he's doing better.
Thank you, Tony. I know your answer on this. I'd love to hear from everyone else. Are ICOs dead?
Actually, can I add some more comments on
Please.
Ton? Actually, I really agree on Ton's comments. And actually, one thing that I want to add on is that actually, I actually really hate to talk about like blockchain industry. Actually, I don't think there is a blockchain industry. Actually, this is just a startup industry that the projects or companies are using the blockchain technology in their business model. So in that sense, actually, we need to like evaluate the projects or the companies with the traditional like investment evaluation models, like how will the industry size will be, or the how much market they can touch. And most of the projects, they are like, when they approach it to the funds, they are saying that our like token economy will be billions of dollars of the economy. But there is no such things because actually the amount of the source of the value, the total value of the money is actually like it doesn't change that much. And if the market is really like all the projects has $1 billion of the like economy, then the market would be like much larger than as it is right now. So I would like to recommend people to like evaluate the projects when normal investors or the traditional investors, and when they evaluate the projects, please consider the like traditional way of evaluating the valuation. So okay.
Thank you, Eric. I'd love to get a quick show of hands from everyone in the audience right now. How many people here thinks that ICOs are dead and they're not coming back? Okay. Interesting. So we have a pretty small minority. Interesting. So if they're not dead, I'm assuming they may come back. In what form do you think they'll be coming back in?
I mean, we're seeing a move now toward the STO model. I use this expression, I think it's market maturity. I think what we're seeing here is the maturing of the ICO function. I don't believe that anybody has ever proclaimed that undertaking an ICO is guaranteed success. There is no, in the startup world, there is no guarantee of success, whether you're utilizing the VC model, convertible notes, whatever option you choose to take, there's no guarantee. And actually, the statistics of the numbers of startups that succeed are fundamentally minimal. So there is no surprise here that 2 years later, people are sitting there going, you know what, I can't think of a project that works, when actually, there's nothing new in that sentiment. Like we've discussed, the number of social media sites that have died, the number of websites and companies that began life with fantastic funding that didn't succeed. It's not a surprise that companies didn't work because there needs to be nosebleeds in order to get the fantastic technology, the fantastic ideas to come through and to pioneer. But in this instance, what's going to happen to the ICO? What's going to happen as things mature is as that market is maturing, blood has been spilt, nosebleeds have happened, and people are learning that actually everything isn't a success, that people will become more reserved. And whereas you guys have got the education to spot a good potential participation, investment, fundraising opportunity, a lot of ICOs attracted people that didn't have that education. And now they're learning, and now they've learned. And so the market is adapting to that. And people, like you were saying, are asking the right questions now. We saw a lot of the wrong questions being asked. And a lot of the right teams are getting behind these projects, which is what we're seeing happening.
Makes a lot of sense. Thank you. Thank you, Cal.
I think we should also refrain from speaking as though there are not startups today that are being funded through ICOs. There are still. So there are companies that are raising between like $1 and $7 million in private rounds with funds that are issuing tokens, usually with longer lockups and with like more tight conditions, certainly. But ICOs are still occurring, maybe just not those that are accessible to retail investors and the public. But I certainly think that that's a good thing. I think there's a lot in the industry that needs to change before we can open our doors to non-accredited investors. But I also don't like the idea that they're not qualified enough to buy cryptocurrencies, to buy Bitcoin, to like do their own research and figure out what they think they should put their money towards. But yeah, obviously that they should learn to only put a small portion of their portfolio to something that is high risk. I think a lot of the issues that we're seeing right now with the market is that we never really had well-educated conversations about risk at all in this asset class. And I don't think people realize like that it was not a crazy notion that they could lose 90% of their invested capital. I think this has come to a shock, as a shock to a lot of retail investors, unfortunately, and that's why we see a lot of people leaving the market today.
Thanks, Shane. Yeah, okay, so basically the over sentiment is markets down, ICOs are not big right now. What are you guys looking into right now, and now that market's down, and how have some of you guys pivoted what you guys have been doing before to adjust to this new market? Questions open to anyone.
So I mean, look, we adapted like I think everybody has. The market differences that we've seen, whether it's maturity, whether it's death, whatever your opinion is, we made the adaptation to start looking at hybrid models, STO with the ICO, companies that are looking to STO, because I think a lot of what has happened now, and I may be wrong in this, I think people have realized that we do need institutional money alongside the average Joe unaccredited money. And I think what's important is that now there is this relationship. The fact that you guys are on this stage really says that. You come from that finance world, you understand it, yet here you are talking about these opportunities. And so when we adapted, there was nothing new there, but I think everybody's adapted. And I think a lot of that, again, market maturity, but I think it's about people working together, asking the right kind of questions. And without sounding overly cheesy, I think that's kind of the spirit of crypto. I think that's the decentralized nature of what it is. People working together to find solutions for things. We're saying, hey, look, we had this fantastic market. Things have changed. Things have died. So let's try and do some new things. Let's get the VC guys involved, or let's go and get some more institutional money. Let's make it more appealing through the STO model, or let's find ways that we can give people security and try and limit that damage. And I think the risk-reward model is now being understood a heck of a lot more by people.
Yes. All right. So first of all, I'm not the opponent. I don't oppose on the ICO model. It's just a different type of the fundraising. So if the coin market, if the coin token economy works, then the project can raise a fund with a ICO method. But what I do more like these days is STO. Of course, but probably this is a very hot issue among these days. And the reason I like it is because not because of the traditional institutional investors can coming in, but because I like it is there are some companies that normal investors, like normal people, cannot approach. For example, if there is a unicorn company like Uber or in China Didi, people cannot purchase their shares because it is not in the market yet. But if the SEO market is more adopted and people can approach to this company's tokens to invest in, then the market would be really getting huge. So I think the SEO model is providing the more liquidity to the normal investors. So that's what I like with this concept.
Thanks, Eric. Yeah, thanks for bringing up STOs. It's a very popular topic for discussion today. Love to hear from some of you guys what you guys think about STOs and how they may be different from ICOs.
I guess the question was on the pivot. So I remember trying to explain utility tokens, and unfortunately, the utility token concept never made sense to me, because why do I have to pay you in your token for your product? I mean, I don't remember Uber creating Uber money and only accepting Uber money. I don't see Amazon only accepting Amazon stock for their products. But for some reason, people thought that it was a good idea to only charge in your own money for your own product. So we tried to explain that on our YouTube channel, how that the concept of a utility token never made sense. Then the whole ICO concept came out, and we, again, try to educate people that the average person should not be an investor. If you want to invest in proven companies. Wait till Uber goes IPO, pick it up. Again, you can buy Facebook stock after it goes IPO. It was overvalued at the IPO, $40. It dropped to $20. Even if you bought it at the IPO at $40, Facebook just hit $200 not that long ago. Plenty of money to be made after the company has proven itself. The current model is the STO. Nothing's changed. It's the same utility token. It's a utility token. Then it was an ICO for funding purposes. And now it's an STO. So the STO stands for, now it's a security token. And because now they want to go under the regulatory structure, they realize that the SEC has global reach and they're going to get them. So now it's going to be regulated. What database are you going to build your STO on? Where's your token going to reside? Are you going to build your token on top of Bitcoin, or are you going to build your token on top of Ethereum or EOS or Ethereum Cash, or are you going to build it on top of BitConnect? All right? These are all just databases that move your token around. If you're going to build your STO on top of Ethereum, how do you know Ethereum is going to be here next year? If you're not sure, please go create an Ethereum node and try to process your own transactions. I have a Bitcoin node. I process my own Bitcoin transactions. I know what's going on there. Try to create an Ethereum node. What happens to your STO if there is another CryptoKitties and Ethereum isn't functioning? Who's responsible? Well, you as the company who chose Ethereum as the database. These STOs don't need a decentralized platform. Eventually, over time, it's going to go back to being a database. I know traditional databases are a little stale, but at the end of the day, you got to pick the right database to put your security on top of, and it has to be functional into the long term. So think about that.
I just come up with a solution for that question, in this stage right now. So I think you know the concept of the stable coin, right? And probably we can create a stable coin based platform that doesn't the value doesn't change. How about that?
I don't understand the concept of a stable coin. The Singapore dollar is a stable coin. The US dollar is a stable coin. So what's the difference? Again, the difference is the database. The only difference is what database is moving your stable coin around. Tether was our first stable coin, and we can see that Tether is not very stable. And why isn't it stable? Because people don't trust it. Why do you trust the Binance version of Tether more than you trust Tether? When you have dollars sitting in a bank account and you turn those dollars into a digital form on top of another database that claims to be decentralized, and then you realize it isn't, you take on technological risk. You also take on regulatory risk. My biggest problem with Tether was, Tether is like a $10 billion problem. And if the dollars are sitting at some bank and the US government doesn't like how Tethers are being used without KYC, what is stopping the US government from going to the bank and confiscating the dollars that are underlying the stablecoin? I don't think any of these stable coins are stable. Eventually, all money will be digital. Paper cash is going to go away. Again, the concept of a stable coin just doesn't make sense to me.
Yeah, that's a fair point. So, love it or hate it, when it comes to STOs, what do you guys think will be the overall impact of STOs on the current crypto markets?
I think I have mixed emotions about STOs. I am not overly an advocate of them because I think what it relies to is it relies too much on regulation that simply cannot exist. In order for an STO to be a true STO, it has to be sold on an international scale. And if you pause and think about that for a moment, if I register a security based in the United States, whether I do that on an exemption or whether however I do it, I can't then go and sell that in Europe or in Asia. Even more so, I can't register that and then allow people to begin trading it on the secondary market, even if I got through the primary. So the real problem is there is no secondary market for this. And I know people are coming up with ideas, and we've been saying for the last 12 months, it's coming in the next 12 months, but it really doesn't exist. And if you then get down into the granular level on the secondary trading market, you then have international laws that, again, physically don't exist. A great example of this is insider trading. Insider trading, there is no laws against that in Russia, but there are laws against that in the European Union and the US. So how, in a truly international market, would you keep that from price manipulation, for example? You can't. So what you end up with is a situation where the STO is a fantastic idea, but it's only great in the primary market. It doesn't cure those problems that we see in the secondary market. So I think what we'll continue to see is a little bit more of an evolution. Either that or STOs will become more regionalized, where they can be monitored closer by regulators.
Yeah, it sounds like a big, big challenge.
But yeah, what platform would you recommend people to do those STOs on?
What platform?
What platform do you do your STO on? I mean, I recommend, the New York Stock Exchange, for example, as your STO platform.
Is that because you're from Wall Street? Is that because you're from Wall Street?
Right. Well, that's because it's a stable one, right? Like I'm not responsible if I'm building a company and I want to. I mean, STO stands for security token sale, right? And I want my company to have a security. The last thing I want is to be responsible for the underlying database having an issue. And I outsource that risk to the DTCC and the New York Stock Exchange or the NASDAQ, or if you're on the Singapore exchange. Like I'm not responsible as a company owner for the underlying database of the Singapore Stock Exchange going down. But if my STO is on top of Ethereum or EOS or anything else that I don't really understand, and I actually understand it, but most people don't, like I can be liable as a company because I chose an unregulated database to put my security on top of. And now you have employees, you may have customers. How do you account for that risk?
So this is where I'm talking about evolution of some kind of regulatory platform that enables people to do that. I mean, we can take examples of pink sheets. Pink sheets are a great example that existed for years, and we saw the manipulation of that. Just watch the movie Wolf of Wall Street, okay? Just because you choose to use a regulated body doesn't mean that it is fail-safe. MarketWatch doesn't see everything that happens, okay? So what this means is actually we're in a position, by the way, if we want to talk about Facebook, let's talk about the investigation that happened after Facebook floated into price manipulation of floating. So nothing we do in the financial world is safe. Nobody is saying there is a guaranteed mechanism to do this. So when we talk about utilizing a database, actually a lot of what you see in blockchain is you don't need the transference of information on a blockchain to be done in a database. The blockchain itself survives the information, and you can just see the transactions that occur. You can go on Etherscan and see everything that's happening. So actually, in theory, in some respects, it allows a completely decentralized situation to exist that may or may not need to be regulated in itself, but the transactions will need to be monitored to a degree. And so what you've got is you're doing away with the typical Wall Street model where everything's monitored. You know who's controlling what, where it is. I can look at back-end brokers. I can look at the facilitators. I can look at the oracles that are verifying the transactions. But none of that needs to exist. So if the transactions are occurring, you're monitoring them at point of source, for want of a better expression, and then they can be self-sustaining. I don't need a broker to activate a transaction. I mean, in fact, actually, the internet is kind of Wall Street's biggest friend / worst nightmare, right? I don't need to phone up my broker in Wall Street anymore. I can jump on my computer and make the transactions myself. I can do the same thing with crypto or an STO token.
It's true. Fair, Cal. All right, we're coming close to the end of the session. Time for some quick predictions. What do you guys think we're going to get back to the previous all-time high of 800 billion overall crypto market cap? And what should we expect the next 12 to 6 months? Don't worry, we won't hold you guys to it. So just...
I'll go real quick. I think probably within a year or two, Bitcoin will be at a new all-time high for Bitcoin's market cap. As far as the total market cap of the entire crypto space, I think that's going to take a good 5 to 7 years. I think that's going to take a while. I go back to the internet. The NASDAQ hit 5,000 points in the year 2000. The NASDAQ did not break 5,000 points till 2015. It took 15 years to recover all that speculatory value. Meanwhile, people continued to use the internet. I just don't think the total market cap is going to come back till like maybe 2025, and it's going to be mostly Bitcoin by then capturing all of it.
Yeah, I mean, I agree. I think that Bitcoin market cap will be back in a year and a half. In terms of the rest of the projects that raised, if we guess that maybe 60% of them were just complete scams, founders had bad intentions and they ran away with the money, that leaves 40% that probably 99.99 of those are going to just fail miserably. And of those, a large amount probably didn't even manage their treasury, so they're sitting on like $3 million. What are they going to do with that? They can't raise another round because they're overvalued, and it's just generally a bad situation. So I would say, unless we see something ridiculous where a lot of these projects manage to hold out, sources of funding include, EOS and Cardano, which are sitting on massive reserves, for example, and like some other groups that have a lot of money to play with and invest. We could see that alts will rally after Bitcoin does, which is normal market cyclicality. I don't think we'll see anything close to 2018 again soon, but it would be kind of funny to me if I see a bunch of coins that I personally know are not going anywhere, that have pretty much failed, still rallying because people are just like going in for the hell of it after Bitcoin jumps. So it's going to be entertaining, if nothing else.
Yeah, I think I'm with you guys. I think it's going to take a significant period of time to see a solid market rebound. I think a lot of that is just pure economics. A lot of the big name companies we see, for example, the Amazon crash of '99, it took them years to get back to where they are. However, I do put a caveat with that. Crypto is completely new. We've seen some amazing movements. So, we could see movement much quicker than we would typically see in the finance world that we're used to.
So I'm the last one to say. So I don't want to act as a doomsday guy, but like mid of this year, people were saying, "Oh, the winter is coming," and actually, I'm not thinking that the winter has yet come. So actually, it's kind of like autumn yet, because as you can see, like this kind of like conferences, there are still a lot of people gathering here. So when the people leave this market, and when you go to the conferences, and if there is no one, keep asking about like when will the market rebound, and if there is no more questions like this, and that would be the base, the market base market. So. It will take more time, like probably like a year or two, and people, when you guys all forget about Bitcoin, and then that time will like when you can like hope for the rebound.
Okay. Thank you, Eric. You guys are just absolutely crushing my hopes and dreams right now, by the way. Okay, so we're out of time. I don't think we have time for any audience questions. So thank you so much, ladies and gentlemen, for joining us here today, and let's give a huge round of applause to our panelists.
Thank you, guys.